Hi there, David Pereira from Rent to Grow Homes. Excited to break down a new rent-to-own deal for my audience today. So this one is for Liam and Emily in Cornwall. They are a youngish couple, so mid-20s. They're both working. He's a cybersecurity consultant. She is a trained accountant who recently found work. Their combined income is about 145K. And it's one of those couples, when I talk to them, gave me hope for the future. Just really kind of good heads on their shoulders, financially responsible. They're just young in their careers and they have some debt that accumulated. Not a lot. They have about 14K that they have to pay off, but they do have 10K savings. So it's actually a young couple and I'm excited to get behind and support. So here is the numbers for their deal. Based on their incomes and based on decent credit and their ability to save, we've approved them for a $500,000 buyback price, which means if we assume a 3-year deal, our starting price today is $432,000. What that means is their max budget today in terms of finding a house is $432,000. That's the instruction we would give their realtor. Assuming a 3-year deal, they would buy it back from our investor at $500,000. The mortgage, so our investor is going to get a normal 20% down mortgage from a tier 1 bank. I have, in this model, used 5% interest. Most of the deals we've been doing the last 3 months have been in the 4s. I've seen as low as 4.29, I think, but for a 3-year fixed mortgage, I expect anywhere between 4.3 and 4.5 right now, unless you're going through a corporation. Then it's higher, but typically it is in the lowish 4s, which is great. It actually creates more profit pie for us. So, but using these numbers, 20%, so cash to bank is this, legal is about $3,000, appraisal is $600, land transfer tax based on $432,000 is $5,115. I have a fee up front of $3,000. The tenant buyer is paying $10,000, which means the investor is all in for $88,115. Now these numbers, legal, appraisal, we use the actuals. Same with interest rate. So I update this chart for our investors with actual numbers. And then once we know the actual all-in number, we calculate the investor ROI based on this number. Now this deal, I'm targeting a 21% annualized return. You'll see further down how we do that. But just to let you know, we do ultimately make the calculations on real numbers. So at $432,000, their rent is about $2,500. The option credit is going to be about $600. This option credit or savings credit is how we force them to save. All of this goes towards their future down payment. So every month they're giving us $3,100. Every month our expenses are the mortgage payment, assuming 5%, it's about $2,020. Insurance I've estimated at $200, property tax I'm estimating at $250. So our estimated total out is $2,470, which leaves us $630 in cash flow or net in our bank account. So each month I'm going to be sending you a $500 e-transfer as cash flow, which you can use as you wish. I will take a $100 property management fee and we leave $30 in our joint account. So let's fast forward to 2028. So the sale price is just over $500,000. We give them back their initial 10K deposit. We give them back that accumulated savings credit. So if you remember, they paid $600 a month for 36 months. We return that back to them. So now they have a combined $31,600 for their down payment. The mortgage is discharged. We pay our last legal. We return your initial investment of $88,000. So the proceeds from sale is $54,000. Now let's look at the overall deal profit. So we had a total of $68K of appreciation. This is the $432 to $500. Then we had mortgage pay down over 3 years of $22,000. We had some rental cash flow. So the total is $91,000. But if we subtract our hard costs of the legal in the beginning, the legal in the end, and the land transfer, that leaves total profit on the deal at $81,000. So in terms of how we are going to divvy up that $81,000, I'm going to be giving you, the investor, basically 21% annualized return. So the way I calculate this is if you are in for 88,000 and every year for 3 years I'm promising you 21,000, well, that's 63% over 3 years. So the total I owe you, if I multiply 63% by 88,000, is 55,512. That is the total profit on this deal for you, the investor. Now, you received $500 a month of cash flow. So 36 months of that is 18,000. If I subtract the 55 number by the 18, that leaves me with 37,000. In terms of how I make money, up front I charged 3,000. I charged 100 a month for property management fees. This is what's left over, and so there's 25,000 to me. Now, I will say that this also covers my expenses in terms of the credit coach that we connect them with, in terms of the work up front to find that. So it's not all just profit, but that is my share of the pie. Now, as we look at the split between you and myself, there's 81,000 in the deal. You got 55, I got about 25. So you're getting about 68.5% of the profit on this deal. I'm getting 31.5. So if this seems interesting to you as an investor who's just looking for passive return, wants to get involved with real estate, does not want to deal with tenant or property issues, and you want to see a family earn home ownership, this might be a good deal for you. Let me know if that's true. Just reach out to me at David Pereira. My email address is info@rentogrowhomes.com. Thanks.